Do I need to have a 20% down payment before I can buy a house? Believe it or not, that's one of the more common questions I get asked. Hi, I'm Chris Henwood from North Point Bank, and welcome to the Henwood Edge. Today we're going to talk about down payments and mortgage insurance. So there's a common thinking that we need to have 20% down in order to qualify for a mortgage. Well, that is not the case. You can put 20, 15, 10, 5%, or any iteration in between, and if you have more money, you can put more than 20% down. 20% just seems to be that's the traditional, way back when that was required, but those days are over, thankfully, and we can put, for anyone who's not a first-time home buyer, as low as 5% down on a conventional Fannie Mae mortgage, which is pretty great for a lot of people who don't have that 20% down. So, like I said, the Fannie First-Time Homebuyer Program, that program allows you to put as little as 3% down on a mortgage. And a first-time homebuyer is defined as anyone who hasn't owned their own home in the past 3 years. So if you've been renting for 3 years, even though you've owned a home in the past, you actually can qualify as a first-time homebuyer, which is pretty neat. Okay, now, if you put less than 20% down, you're going to be required to get mortgage insurance, or what's also referred to as private mortgage insurance, PMI or MI. Now, the three main factors that go into determining what your mortgage insurance premium is the loan amount. How much money are you borrowing? And then the second factor is what's your percentage of down payment. So the lower your down payment, the more mortgage insurance you are required in order to kind of cover that gap between what you're putting down and that 20% magical threshold. I say magical, but it's just traditional. And then the final aspect, which we see all the time and runs through every aspect of our financial lives, is our credit score. The lower your credit score, the higher your mortgage insurance premium is going to be. If you think about mortgage insurance, is just like any other insurance, it mitigates risk, and therefore if you have a low credit score, you're considered a higher risk. So you want to make sure your credit score is in good shape, and that'll lower the amount of mortgage insurance you'll have to pay for anything less than 20%. Now, in addition to a conventional, we also have the FHA mortgage, and I did a show a while back about FHA mortgages. There are two components to the mortgage insurance that go with an FHA loan. The FHA loan has the upfront mortgage insurance premium, which is 1.75% of the loan amount of the loan you're borrowing under this program, and that is charged at closing. The great thing about it, though, is you get to take that upfront mortgage insurance premium and roll it into your loan, so you don't have to bring that cash to closing. But that's the first piece of your mortgage insurance under this program. The second is your monthly mortgage insurance, and that's what gets paid every month with your mortgage. That's equivalent to 0.085% of the loan amount on a yearly basis, which means we divide it by 12 to come up with your monthly number. So it's very easy under the FHA loan program to calculate what your mortgage insurance premiums are going to be, because it's a straight mathematical equation. We don't rely on getting a quote from a private mortgage insurance provider. That's a mouthful. And the great thing is, under the FHA program, it's not contingent on loan amount, down payment size, or your credit score. And as we know, the FHA loan program will let you put as little as 3.5% down, which is great. So if the FHA loan program is for you, this is how the mortgage insurance component of it is arrived at. So, as we always say here, there's no such thing as a one-size-fits-all mortgage, or in this case, down payment or mortgage insurance premium. So everybody's unique. Everyone's circumstances are different. Their credit scores are different. How much money they have available to put down is different. So we try to do our best to go out into the marketplace and get the best mortgage insurance that we can for our clients, so that they can pay the least amount for it that's available. As always, please give me a call, shoot me a text, and we can discuss your particular situation. I'm happy to answer any of your questions, and all my other contact information will come on at the end of this video as well. And I really appreciate all the feedback I've been getting from all of you out there watching. I appreciate it. Keep the comments coming, and we look forward to seeing you next time on the Henwood Edge. This is not a commitment to lend. All loans are subject to credit review and approval. Not all loan programs are available in all states. Contact a North Point Bank loan officer for further details.